This is a Stock Trading Reality Podcast, episode 98.
When you work in this environment in bank, you understand how much advisors don't know anything about the stock market.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host. He's a hoarder of old newspaper, Clay Trader.
Now, don't get any wrong impressions. I promise that if you come into my house, there are not stacks of newspapers everywhere you look. Ches, our co-host, is in Denver, so I promise these newspapers are not like the Rocky Mountains or anything like that. But growing up, I played sports and stuff like that. And my mom, she always liked to do scrapbooking or whatever, where, hey, there's some papers that come out. So you cut out little sections and then you put it in the scrapbook. And, since then, there's just random newspapers that are kind of sitting around. So when I clean my office once in a while, or even when, my parents come to visit because they still live down in Ohio and I'm up in Michigan. But regardless, they'll just bring some newspapers. Hey, did you see this? Big events or whatever. And so, yes, I do. If I stop and look at the mirror and say, Clay, I guess I am a little bit of a hoarder. Nothing crazy, but I suppose, hoard newspapers. So, Ches, please don't judge me, but are we still friends, even though you now know that I'm a hoarder?
Well, yes, it's fine as long as 2 rooms of your entire house aren't just stacked with newspapers. Then I guess we can be friends.
With animals living in them.
Yeah, it's like its own ecosystem. But yeah, if you don't have that going on, we could still be friends.
Yeah. All right. Good. So that's just I guess we all have our little quirks. Quirks is the right word there, but I don't think. I mean, that's pretty normal. Like for scrapbooking, right? You want to keep track of things, so you cut something out and put it in a scrapbook. That's not totally bizarre, is it? No,
it's not that bizarre, and most people kind of collect various things. Yeah, not not that bizarre, but it's the thing for me is that I always end up collecting like spare hardware parts, and I think I got that from my dad. In our garage, we had kind of, if anything ever broke in our house, my dad always had something laying around from some other thing that wasn't even related to it, and I kind of have the same thing going on to the point where Kelly had to buy me a bunch of tool chests and kind of ways to organize it because I had too much of it. They were living in kind of these bins of just mishmash parts of hardware. So I'm the same way, just now with newspapers.
Well, yours has a little bit more practicality because, hey, you never know when you might need one of those parts. So it's
now, to be fair, though, you could always make a bonfire with all your scrapbooking stuff if the world is coming to an end. Me, I can only, build a fortress. That's
you could throw the
I can't
parts.
Keep warm, though.
If zombies are attacking you could throw the heavy parts at them, too.
That's true.
I think we're just trying to be polite to one another and make each other feel a little bit better about our little hoarding issues. But anyways, let's move on to our guest. And I noted this right at the beginning, but Danny is his name, and he goes by the same name in the chat room. But he is not our first Canadian, but definitely our first French Canadian. So English is not his first language, but he does a fantastic job with it. And we were talking immediately after this ended, but he was or is a financial advisor. And being a financial advisor, he had no problem just kind of talking in depth about how the whole financial planner, financial advisor world really works. And it's quite fascinating. And we talked about it for a while. And he's got a super fascinating journey. And he's lost some money. He's done a lot of the self-realization things. But I don't want to give any more away. So let's hop in and start hearing about Danny and his journey. Well, hey, Danny, welcome to the show.
Hi.
It is great to have you, and we were just talking right before we got started. Danny is yet another friendly Canadian from Quebec, though, as we quickly discovered before we got started. So he is French-Canadian, as I asked him, and he is polite about it and said, yes, I'm French-Canadian. And
we decided to do the whole podcast in French this time, so don't worry about it, guys. If you can't speak English, we'll have a translation at the end of it.
I can do both French and English.
There we go. But so Danny said, so English is, it can be a little rough sometimes. And Jez and I both said, you know what, your English is 10 times better than either of our Frenches. So no worries there. Talking with you, it's going to be a good time. I think you are the first French Canadian, not the first Canadian, but pretty sure the first French Canadian. So, this is going to be a good time. Now, as you said, you've listened to like 30 to 40 of the podcast, so you know what's coming your way. So the very first question, as always, what got you interested in the markets? How did you first hear about them? Just kind of walk us through that initial, portion of your journey.
Well, since I work in bank, I'm a financial advisor. I've always been interested in the market. I do this job for about 8 years. So I always like to get into the market, but never took the time to do it. And recently, like 2 years ago, I did some research about it and how could I start and like the basic search that everyone does when you want to start a new thing. And I knew the basic because from school I had some class about the stock market, but nothing really fancy, just like the basic and everything. So
actually, I want to just interrupt you real quick. What got you interested in the markets to the point of wanting to become a financial advisor? I mean, so let's go back, not even necessarily trading, but I'm just fascinated. So you're a financial, advisor. You work in the banking sector. What got you interested to even want to go, take that as a kind of a career route?
Well, when I was at school, at the university, I did the financial advising program, and I really liked it. It was a pretty cool program, and I learned a lot about it. And my student job was I was a cashier at Desjardins, which is a bank where I live. And slowly but surely, I go up in
the ranks of the company. You got promoted.
Yeah, exactly.
Okay.
So I got promoted and become financial advisor, and that's pretty much it. So it's more. I knew that at first I wanted to be an accountant, and after taking some accountant classes, I found it so boring that it didn't interest me anymore.
Yeah, you get a little bit more interaction with people rather than spreadsheets when you're a financial advisor or financial planner. So that's pretty cool. Now, Is it safe to assume that working in that kind of job, you had, I'm assuming you have kind of retirement plans and things like that, right?
Yeah, that's totally fair.
So it's interesting to me that, you said you kind of were in this job for a couple of years before you actually kind of got interested in the sense of you wanted to get kind of more active in the market or kind of more interested in it. So, you obviously have your money parked in retirement, you're working, your 9 to 5 or whatever the hours are. So what actually made you decide that, hey, you want to take a more active role, or you want to take, kind of take control of those particular, funds of your trading versus just kind of, putting them in a mutual fund and letting them go?
Well, because a light bulb popped. It's when you work in this environment in bank, you understand how much advisors don't know anything about the stock market.
You heard it here first, folks. We're pulling the curtain off of the whole thing.
Yeah, I appreciate that transparency. Yes.
Yeah. Well, most of the advisors are more like salesperson. We have the good interest of the customer, but our boss doesn't necessarily have that good interest. They give and they take. So mutual funds are great. It's a good tool to invest if you don't want to take the time and manage your personal finance. It's the best that you will get from a bank. But if you want to take the time, which I does, it's like an absurdity to have like 5% per year if you're doing good. It just makes no sense for me.
I love it, and essentially, if I heard right, it sounds like the biggest asset, the biggest attribute, what would make you, quote unquote, a good financial planner is not necessarily how much you know about the market, but your sales ability. As far as a boss would be concerned, it's all about your sales ability, not your knowledge of the market. Is that a fair assessment?
That's perfectly true. Because if someone sits in my office, I need to sell them a MasterCard, Visa, an insurance. I need to make some saving count, and then try to or credit. Like my main job is to do mortgage, which I love because I help people to build a project and buy a house. But all the other thing around, it's like selling a credit card and put some savings on the side, but I will give you 1% if you're risk averted. So I love my job.
Things that generate fees and stuff like that. So that is a real interesting point for sure. Go ahead. I'm sorry, I cut you off.
Yeah, I was just gonna say that makes sense, and I mean I still remember this was a couple years ago, but I had to get some stuff done for real estate. I needed to have something notarized. So my bank offers free notary as long as you have accounts with them. So I go into the bank and I need to get this notarized. And then all of a sudden before I know, well, have you thought about this? Have you thought about this? Did you know we offer this business credit card? Do you know? And I'm thinking, holy smokes, I just need this notarized and I need to get out of my way. But, and I guess I'm shame on me, even though we've had a couple other financial planners, but I thank you publicly for just kind of just telling people how it really is. But I always thought, and Ches, I want to get your thought on this too, but my mind was, okay, financial planner, I would not expect from them to hear, well, then I had to go learn more about the stock market. I had to learn more about this. In my mind, they would already know about all that stuff and be very proficient at it. I mean, am I the only one that would kind of make that stereotype there, Ches? Or I think that's a safe assumption on my part, but how do you view that?
No, I think that's a completely safe assumption. I would venture to say that most people, if you ask what is the job of a financial planner, they'd be, they're supposed to analyze, what are your kind of return investments, what's your time frame, things like that, and then put you into investments that align with kind of your goals. However, as Danny just kind of opened our eyes to, what he's really being judged on in his job is, how well they can kind of get people into more products for the bank, and that actually makes total sense from the bank side of stuff. But I think just the job title alone gives this implication that, these people are looking at, fundamentals and finding what stocks and, how you should be weighted in the market and stuff like that. And I'm not saying Danny doesn't do any of that, but, Danny kind of said that most of the job is kind of, rolling people into other products. Yeah, I think most people who never kind of looked into it. Unfortunately, I did look into it because that's why I kind of recognized I always wanted to manage my own money. But yeah, if you had no idea about it, you'd probably expect the same thing like you do.
And I don't want to, neither Ches and I, we're not bashing financial planners because to Danny's point, they are selling you quality things. I mean, a mutual fund, at the end of the day, if you hold on to it for 40 years, I mean, the track record of the history of the stock market shows that mutual fund is going to put you in the green over time. Is it going to be the greenest of green? Maybe not. But so it's not like we're saying that financial planners are a bunch of scumbags. We're just saying, because we're looking at it from Danny's point of view, which makes perfect sense, is the financial planner, just like you at your job, you want to impress your job. You want to get up through the ranks. The financial planner's not being judged on, wow, you got that client 18% per year. Wow, you got that client 15% per year. They're being judged on, hey, how much have you sold? So selling techniques is going to be more important to a financial planner than what actually is being, the results of things from the boss's perspective. So, wow, that was a great tangent. That was, see, Ches, just when you think, wow, we kind of seem to talk about a lot of the same things over and over again, we get a whole new topic of conversation, which is super fascinating.
We just pulled the curtain off of the whole kind of mutual fund. No, I'm just kidding. But it's you do bring up a good point that people who just don't find the time to kind of do stuff like that, then it's a great kind of vehicle to use.
Yeah, for sure.
It's good for some, it's bad for the others. But ultimately, if they sell you mutual fund, they will have like these 10 mutual fund that they have, and it's all that we're able to sell. These are like high quality picks, quote unquote. And if you want to do some investing, I want to buy this stock and this stock, well, it's just not for you. You're not at the right place. So they are all preset mutual fund, and you cannot go outside of the box, really.
Yeah, exactly. A bank's going to have certain products. That's Fidelity is going to have the Fidelity mutual funds, or the Vanguard, all that sort of stuff. their products in and of itself. So for you as listeners listening to this, I'm assuming maybe you're more so trading, but just understand that investing, at the end of the day, investing, take a pile of money, chop it up into a bunch of pieces, and then just spread it around and buy a bunch of stocks that you've heard of before. And that's it. You've just created your own mutual fund. So if you have the wherewithal to do that, that's all it takes. That's all a financial advisor, that's all anybody is doing. That's what a mutual fund is. They're diverting, they're spreading out risk among a bunch of different stocks. And that's what I personally do. I don't own any mutual funds. I've just created my own mutual fund. And I don't say that to be like, oh, and I'm super smart. No, everybody pretty much creates their own mutual fund as long as you're not putting all your money in like one or two stocks. So
diversification, that's the thing.
A lot of mutual funds are like a bunch of other mutual funds in it. So it's like a semi-Ponzi scheme of mutual funds. They all take the annual fees on each other, and it's just bad.
Yeah, Ponzi. Yeah, I mean, I'm not. I would agree. I don't think mutual funds are necessarily the best way to go. But if I fully realize that the three of us here, we're just a bunch of weirdos that like numbers, like patterns, like to, So if you're like my parents, maybe a mutual fund isn't the most absolutely efficient way to go about things, but it's better than putting your money under your mattress or burying your money, in your backyard. So
certainly, it's the best for this kind of person that like to just don't care about managing their money. They just want the money to be there and grow.
Exactly, over long periods of time. Absolutely. So, well, we went off on a big tangent there, but that was some good stuff. So, circling back to you. You have been helping people. You're okay. There's a lot of sales that goes in, but now, I want to learn a bit more. So you started to do the typical research about the stock market. Where did this research come from? Was this like library books? Was it YouTube videos? Where exactly, how and where did you research?
Well, I look at some YouTube video and Google research, but the first thing that start me and convinced me to go to start it for real. I met a guy in a trip in Thailand that I become friend like 2 years ago, and like last year I met it again in Cambodia on another trip, and he was saying to me that he was able to live in Cambodia by trading, and he was following this guy advice. And he was doing great for the last 2 years. I was pretty skeptical, and well, I knew that if he can do it, I probably can do it, because my financial background is way better than his. He was like a businessman or something. I don't really know, but I didn't want to be the guy that was following another guy. So I'm the kind of that guy that when I do something, I want to know everything about it.
You'd rather learn how to fish instead of being handed a fish and then being completely tied to that person essentially handing you a fish. So first off, I want to commend you on that mindset, because there's a lot of people who would just see your buddy's success and say, hey, I mean, if he's just literally following this guy's stock picks and he's, living in Cambodia just trading, I should just do the same thing. I mean, this guy does all the work for me, and then blah, blah, blah. And then I always counter with the really, really bleak side of this, and I say, well, what if unfortunately that guy got hit by a bus? Is your income stream just completely dried up because you were always kind of relying on him and you didn't actually learn how to do it yourself? I know it's an awful, gruesome kind of example, but that's kind of the argument I always make to people who say, I just want hot stock picks. So you recognize kind of really early on, first off, great on you for being skeptical, because usually if something sounds too good to be true, it almost always certainly is.
Chaz. So I had to chime in that. Living in Cambodia, following somebody else, that sounds a little, I don't know, too good to be true. So yes, well said, Chaz.
So I have done some research on Google and find like the classic website of Tim Sykes, which I straight up knew that it was scam because it was like so obvious. And then I was researching with the YouTube video, and I knew that if I want to learn stock trading, I will need to be to pay for some education, because there's like plenty of information, but it's like there's no way to have the content. It's like a mashup of everything on YouTube, and you learn one thing and it leads you to another thing that is not really related. So when you're learning something, you need to have path. You cannot just learn one thing here, and another theory down here. It just doesn't make sense. So I purchased a first course of a guy named Sasha Evdakov on YouTube. He was pretty calm. I love his explanation, but I found soon enough that he was not really a trader. He was a theoretician. So it was not a high price course. So I soak it, and I find a new quote unquote mentor. I tried to have a French course because it was easier for me to understand everything, and I was at the basic of it at the start of it. So I really want to have a good basis. And I paid like a decent amount of money for a first course, which have all the basics and everything like that you need to know. But it wasn't really what I was looking for after like I think it's a 80-hour course. It's like you have to do this one strategy. Like there was 3 different strategy, and that's about it. So I kind of let it go and did some more research, and that's when I found Clay. And I didn't have really a lot of money at this time, because I just closed my company, because I'm a financial advisor, but 2 years ago I dropped the bank to open my own company with my brother, and after a year I decided to sell the company back to my brother, because it didn't go as well as I thought it would. And well, I was not really in a good position to buy a course, but I knew that if I wanted to learn the stock market, I needed to do it right now, not in 1 year. So I took a loan, because the only thing that is worth taking a loan, like a low interest loan for sure, mortgage, sorry, it's the education. So I remember that I asked Clay if I could have discount or something, and he straight up told me no, there will be no discount for you.
There are no discounts. Yep, that sounds like something I would say.
That's what Clay would say.
And that's okay. That's really okay. And the next day I took the mortgage, and I paid the CTU straight up, because I knew that I really, after doing some research, you're legit. You're not like the kind of fancy guy that tried to sell you the bullshit. But and I knew I love how you did your explanation. Even if you talk a lot in your video, it's like really clear. It's you take the time to demonstrate everything, so it's pretty good. So I'm still paying this course right now, but I think it was a good investment for the future. When you go to university, you have to. Some people will do a mortgage or loan to pay for their study. I took it the same way for the stock market, because I know that someday it will lead me somewhere.
Yeah, well said. And I want to just circle back to a point you made, and to preface it, not to try to sell any of the courses that I offer, but to really sell anybody's courses. If you're thinking about, on the fence about somebody else's courses, or who knows, maybe one of the courses that we offer. But I like how you said, in regards to YouTube, you pretty much understood right away that the internet has free information. Ches and I have said this multiple times before. That is very true. We can't sit here and say that the internet doesn't have information, doesn't have good information. The problem is there's just so much of it. And like Danny said, sometimes it doesn't relate to one another. And you may learn something and then you don't know if, well, does it make sense to learn this next? Or maybe it doesn't. Like you said, maybe it doesn't relate. But you don't know what relates, what doesn't relate, what does make sense, what doesn't make sense to learn next or learn first. Or, you got to learn these 3 things before you learn that, or else that is going to get really corrupted and you're going to have a bunch of bad habits. And it can be a total mess. So Danny didn't use the word, but, and correct me if I'm wrong, Danny, but it sounds like you just understood that from the get-go. You wanted some sort of structure in your education. You wanted a certain order. Okay, watch this first, then learn about this, then do that, then learn about this. You just wanted a clear path of do this, that, and the other. Whereas in the vast ocean of, the internet of free information, there's all sorts of good stuff, or there's all sorts of stuff. Some of it is good. And even assuming that you could stumble across all the good pieces, which would be hard enough itself, but let's just assume that you get lucky and you pick all the good bits of information. Well, you still have a problem in terms of, well, what order do you learn that information in? So, definitely something to consider if you're kind of on the fence. Should I just keep doing random stuff, YouTube videos, or should I maybe invest into a course? Obviously, we would want it to be ours. I'm not going to sit here and hide that. But if it's somebody else's that you feel more comfortable with, then yeah, definitely go with that, because structured is definitely, the way to go. So, how long ago was all this going? So from a timeline wise, was this several months ago? Where are we at in?
It's been a year, but I think I skipped a really important part after the second course that I took. Like, I think it was in February last year. I had this Lyra account that I have because I quit Desjardins, my job at the bank, for 2 years, so I had to take it back. And I have like $14K, like $14,000, which is pretty good, a decent amount of money.
It is.
And after the first course, the second course, that's why I got pretty cocky. I knew, I was like, okay, I got the basic, I know how to trade, let's go.
Now, is this my courses, or sorry, Ches, go for it. I think you're gonna ask.
No, it was not your course.
Oh, okay.
I think this is what I was going to say. Is this is generally the point where people say they know just enough to be dangerous, and it sounds like Danny knew just enough of the basics to kind of be dangerous, and now he's going in with that 14K. Is that pretty right?
Yeah, that's right. And I back in the time, I didn't know anything about RVR or thing like that. I just like opened my Questread account, having the 14K, and I was like, okay, I will try to grasp this up. I have it's one thing to have the notion, the theory, but doing it's another game totally.
I love that. Great quote.
Yeah,
beautiful. Yes, theory and practice are 2 totally different things.
Yeah, you can be the best theoretician ever, but when it's come to the real thing, it's not the same thing. So my first trade, I think, I don't remember the stock, because I don't really trade stock anymore. I'm more into Forex, but I think I just put in an order, buy order, because in the Lyra account you cannot short stock, you can only buy stock or buy option, but I was not into option, and I straight up lost $300. Straight up. So
like in a snap of a finger, or how long did this trade last?
Oh, about 15 seconds.
Okay. So $300 gone in 15 seconds. Gotcha.
Yeah, and it's gone. So I was like, holy shit. Okay, my size was too high. So I learned like in everything like it, and something didn't make sense. And after a while, like 1 or 2 days of just checking the market, I noticed that Questrade delayed the account of 15 minutes if you don't pay them some fees. So I was trading on delayed data.
Ches, we have another one.
We do have another one.
And delayed data is usually 15 minutes, I think, is the standard. So for you new listeners out there, very good learning point here. Make sure your broker is giving you real-time data, meaning what's going on right then and there. Because if you're not careful, and I laugh because it's funny because I never did it, but we've heard many times before, and it's relatively easy to do when you're totally brand new to just assume, which I would say is a safe assumption that, okay, this data is real time. It's occurring. The price of that stock, that's what it is right now. But what a lot of brokers do is what you see is not what the actual price is. It's what the price was 15 minutes ago. So here Danny is using real money, thinking he's trading, but what's actually going on is he's using information from 15 minutes ago. So,
and the bid and ask wasn't making any sense. And I was like, I was placing my order and they got filled when the price wasn't on it. It just didn't make sense. So for any listener, just if you're starting, just check if you have delayed data.
And I want to commend Danny because we've had other guests before who said, hey, actually, at first I was trading better with the delayed data. And I was going to go, well, that might have worked for a trade or two. But generally, you're pretty much trying to trade with, two eyes closed and your hands handcuffed behind your back. So, yeah, it's not a good thing.
So where the story is got more complicated because I think I bought the clay course at the end of June. It keep going ups and down, and I was slowly grinding my money, not big deal because the 2 or 3 first trade learned me a lot about position sizing, and I was trying to trade small, but there's one day called I think you know about it, Brexit.
I remember Brexit for sure. Yep.
Yeah. The day before, first of all, when the Brexit occurred, I didn't know that it was something, or I didn't check the news really. I was just chart trading, and I did buy a short triple ETF against gold the day before the Brexit. So next day when Brexit occurs, I lost $600, I think, on my Lear account, and that's when I knew that I had to do something with my education because I was just grinding my money, and in the span of 2 or 3 months, I lost $2,000. So it's a lot of money. Seriously, it's. I don't have this kind of money right now. It's a Lira account, so I cannot touch this money until I'm retired, but it's still... it was a really bad feeling. So I knew that...
No doubt about it. $2,000 is a lot of money for sure. And to be gone in just a couple of months, I fully agree.
It was painful. So that's why I knew that I have to step up and buy a pretty solid course because I was doing everything wrong. So this is when I bought the course.
So the $600 loss is kind of the trade that really made you acknowledge that you were doing things wrong and you had really no idea. Is that pretty much the...
Oh, yes.
Okay, so the trades before then, you thought, it sounds like, okay, well, I'm learning a little bit, but I can still figure it out. Oh, okay, well, I learned a little bit more, but I can figure it out. But you kept losing money, and then finally the $600 one is where you said, all right, enough of this. I really don't know what I'm doing. And as Ches always says, that was kind of your uncle point where you just said, all right, I need to totally tap the brakes here and figure something new out.
And at this point, I just close all my position on my trading account, and I said I'm going to paper trade until I'm ready. There's no way that I'm going to lose another 2 or 3K just for learning after spending $2K just for the course, and it's every loss adds up. It's like you spend 1,000 here, 1,000 here, you lose 1,000, and I just didn't want to keep losing, so I started paper trading, and I still does. I fixed myself a goal to paper trade for 1 year, and if after this 1 year I'm not ready, I will trade for until I need to be. I need to do to be ready. I will just keep paper trading until I find myself like a decent trader to go with real money.
It's a very important thing to kind of realize, because I have a lot of conversations, on the phone or just in the kind of customer support realm, and I always tell people the same thing that you kind of recognize on your own. Close your positions down, stop using your hard-earned capital to learn what to do right and what to do wrong, and really focus on the process and kind of figuring it out. And once you do feel like you have a good solid grasp on it, you have a track record, you understand that you're not going to make any boneheaded mistakes and, throw 50% of your account in one trade and then lose most of it, then you can start to kind of scale back into the market. And, I love this, Clay, the fact that Danny said, I will do this and I will, practice as long as I have to until I kind of got it right. He's not saying, well, I need to make money in the next 3 months, so I'm going to give myself 3 months, and then no matter however I'm doing, I'm going back live again. He said, I'm going to do this until I get it right.
Yeah, and on 2 points, which is perfect timing, because I don't know why, but within the past 2 days, literally, I've had 2 or 3 different people say, how long do I need a paper trade for? And to Danny's point, and which Ches was just harping on here, until you're ready to go. How long do I paper trade for? That's a very common question. Maybe you're wondering that the same, which, yeah, okay, that's a logical question. But I don't know. If you come out of the gates and you are just winner, and you've only been paper trading for 3 days, hey, maybe you're ready for real money. Now, I highly doubt. My guess would be there's something not quite right with your paper trading. But the point being, you got to just let the results speak for you. I mean, if you've been trading for 3 months, paper trading, and you've got 2 winners, then it sounds like you got another 3 months at least to be paper trading, because whatever you're doing is not even, it has only given you, 2 wins. So how long should you paper trade for? What's the, minimum amount of time you should paper trade for? That's a case-by-case basis, and you got to just let the results tell you when you should be potentially going live. Now, a lot of people are like, wow, I just made $80,000 paper trading on this simulator. Well, those people, if you're in one of those cases, just please start with small size, because we won't beat that dead horse in this episode just because we've talked about it so much. But a lot of people aren't really even paper trading the right way to begin with. So it gives them, what is that, a false positive, I think that would be the correct terminology. And then, they kind of get a rude awakening. But yeah, very well said, Danny. He's going to trade, or I should say paper trade until he's actually getting the results that tell him, all right, yeah, Danny, now it's time to maybe start to scale in with real money. But as far as how long, I don't know. That is a case-by-case basis for sure. So yeah, definitely a good point there. Now, earlier you mentioned Forex. So is that what you're trading right now, is Forex?
Yeah, I'm mainly into Forex because I really hate gap up and gap down. That's something that I cannot, I just dislike. I don't like to have to find a stock and knowing that I can trade at certain time of the day, and the next day if I have a position open, because I cannot day trade because I have a 5 week job. I have a job like everybody else, and I cannot trade on the market hour on the stock. So well, I had to do some swing trading if I wanted to have a decent trading experience. And I just dislike the gap up and gap down. It's like I don't like to not be in control at all the time and being like at the mercy of the market at 9 o'clock, at 9:30, when the market open or when the market close, which these big these big gap, and I cannot react to them. So that's why I'm into Forex, because it's a 24-hour market, and I can when I go back to my house, I can still trade. I can grasp the market, I can look for setups, I can plan the trade, and I know that tomorrow there won't be any super gap that I cannot react.
And just for kind of our newer listeners who might not be kind of familiar with what exactly kind of the Forex market is, or maybe the futures market, what Danny's really hinting at, that the benefit for him is that it is a market that almost operates, I think the Forex might be 24 hours straight up, but the futures market is open for 23 hours a day, 5.5 days a week. And what he's saying is that with that fluidity, with the fact that, it doesn't close at 4 p.m. Eastern and then open again at, 9:30, there's no kind of overnight risk is a good way to kind of term it, and that's where kind of gaps come from in kind of the U.S. market. Now, at the same time, there could still be some kind of huge moves that happen overnight, but Danny is always able to kind of have his orders in and be kind of prepared if something does happen. He can't just wake up in the morning and say, well, I lost $10,000. If he has a stop in a logical place, say he's willing to risk, say, $200, if some big move happens, he's only going to lose that $200. The market has been open the whole time. It's just a more fluid market motion. Things don't close, so there's no real kind of breaks in the trading period.
That's correct.
And I also like the comment you made, because it just goes to show, we talk about this all the time on the show, but you got to find your personal risk tolerance. And Danny revealed to us a portion of his personal risk tolerance when he says, I like to just be in full control. And he means full control in every sense, because if you are like Danny and want to be in absolute full control, then swing trading, stocks, you are going to be, not in full control. Ches, nice termage on the kind of overnight risk. When the markets are closed, you do lose control, because if something happens, if a company just has some sort of scandal, or who knows what, there's a million things that could happen, then the price will open up, and wherever it opens up, it is what it is. There's nothing you could have done about that. Even if you had pre-market, the ability to trade in the pre-market and post-market, there is still time where there's literally no trading at all, and it is out of your control for that portion of time. But some people, they don't need to be in full control. I'll speak for Ches. Ches swing trades too. Now, he doesn't swing trade the way Danny was. He's using the advanced options market. But some people, they're okay. They're okay with not being in full control at all times, because they have, there's so many tools in the market that allow them to be okay. So, I don't want to speak for you totally, Ches, but obviously you don't need to be in full control all the time, right? Because you have the options.
Correct. So the beautiful thing about kind of advanced options especially is that while I'm totally at the mercy, generally most of my trades last almost 3 full weeks, statistically, the thing is that when I put my trades on, similar to kind of so here's the real difference between what I do with advanced options and what people can do with stock. So here's a great example. We already kind of talked about, Danny experienced Brexit, and as we all did here too. The thing is that the SPY opened or closed the night before at 210. The next day, it opened at $2.03, so 203. So it went down $7 before it even opened, which means if, say, you were in at 210 and you said, hey, I want to have a stop loss at 208, when that market opened at 203, you just got cooked for an extra 5 points, okay? And there was nothing you could do, and that's part of what we call overnight risk. What I do personally with advanced options is I can actually structure my risk and essentially dictate my max loss the minute I put on a position. So it's similar to a stop loss. And even if the stock went, say I had a position on for SPY during Brexit, which I definitely didn't want to be a part of. If the SPY went from 210 down to, $100, my risk was always capped at, say, $500. So I never could lose more than that no matter what it did. And that's kind of the cool stuff you can do with, structuring advanced options. So I definitely have overnight risk, but I feel I'm able to sleep much better at night because I can already set up, where essentially I want my stop to be no matter what the stock does, which is pretty cool.
Yeah. So the whole moral of the story here is, here's two traders, Ches and Danny, that their personal risk tolerances are just a little bit different. Neither of them are right or wrong. It's just why nobody can sit here and be like, I have the strategy for you. No, you don't, because anybody trying to sell you a system, sell you a strategy that says follow this, and that doesn't work, because we're all different creatures of risk. We all have different interpretations of what we feel is risky. So there is no one size fits all strategy. So how did you hear about Forex, though, Danny? That's what you've been focused on, but where exactly did Forex kind of come into the picture for you?
Well, first I stumbled upon a video on YouTube about futures. I think it was another podcast of Chat with Trader. I think it's like another good podcast on YouTube. And the guy was talking about the future, about it was like almost 24-hour open. So I got interested because at my job, I can have my chart open, but when I'm with the client, which is like most of the part of my day, I cannot really check the market that much. And I really wanted to be able to trade when I'm at home, after work. So that's really what got me interested. And when I checked the E-mini S&P, I think there's a really high entry fees. I think you need to have like $2,500 to be able to enter a position, and I was like, oh, that's too much for me. I don't have this kind of money to put on a trade. And I did some research, and that's when I stumbled into Forex, and where you can have a smaller position, bigger position, and that's pretty much it. It's like 1 week before you release your Forex course. So when you release it, I was going to
ask you, had you taken the course? So kind of bad timing then, I guess. I was a little slow on that then. Sorry about that.
Oh, it's okay. But I still watch the Forex course that you did, and that's just reinforced some notion that I have learned on YouTube, but in more in depth. Because 5-minute video versus like a 40-minute video, you don't have the same kind of detail.
Right. And as you said, I like to talk a lot. I'm all about the detail and explaining until the cows come home. But so are you trading with real money right now, or you're still in the paper trading phase, correct?
I'm still in the paper trading phase. And I like now... before I was paper trading, I was like losing money. Now I'm like making small amount of profit. I'm pretty constant, but I'm still making some mistake. I'm not disciplined enough, I think, and I really think that I will do the full year of paper trading before getting into the market, because I don't feel ready. I just don't feel it.
Well, sounds like, you've gone through kind of as Ches has kind of coined the term, or the cycle of trading. You lose money, and then what, Ches, you break even, right? That's the next stage. It's not like you go from losing money to all of a sudden making money. You got to go losing to break. Why don't you why doesn't Ches explain the Ches cycle of trading? That would probably make the most sense.
Yeah, so you're never going to go from, and I mean, there might be some rare cases, but generally, more times than not, you're going to go from losing money consistently to losing money less consistently. And now once you're starting to break even, where you make $10, you lose $10, and I'm not even going to get into kind of risk management strategies or anything like that, you got to get to that break even phase first. And to be honest with you, people who get to the break even phase, they're still going to be frustrated. I'm speaking from personal experience. When you're break even, you're going, man, this just stinks because I'm not making any money. But at the same time, you have to recognize where you've come from. You've come from consistently losing money, and I'm full on board with this, because I used to lose money all the time, and it took me a long time. I mean, more than a year, to kind of really even get to the point of break even, to the point where I said, wow, I have to really look at this in the sense of, this is kind of a journey. If you go from losing money to break even, this is an upward trajectory. No, I'm not going to be able to buy a yacht in the next couple months, or, a brand new Lamborghini, but that was, hopefully that was never the goal in the first place. Once you get to break even though, now you've already started to curb some of those bad habits that, have caused you to lose money in the past. And if you can keep kind of recognizing, where your shortfalls are, and really kind of pressing where you're doing well at, this is when you start to get into kind of profit land. And I know Clay always has to clarify on my little analogy, where I say that, the hardest thing in the market is to kind of make $1, but in reality, the hardest thing in the market is to kind of keep that $1 you did make. So once you can kind of make $1 though, now these things can start to scale up. And, that's why we always say, start with small positions, whether it's Forex, futures, it's a little bit hard because of how leveraged it is, stocks, Clay, we've had people in the community that have gone from, I'm starting with 100 shares, and we've literally had them knock down to, 25 shares, 10 shares, just because they want to keep, some money in the market. And that's okay, because real money in the market does bring voices out. But at the same time, once you can prove yourself with 10 shares, it's not unfeasible to go to 25 shares or 50 shares and scale it up as your process works. That's what you're really doing to yourself, is you're proving to yourself that you are capable of doing this and not making boneheaded mistakes that are going to blow up your account.
Perfectly said. So looking at the time, we got to start to wrap things up, but I do want to ask you this, since you kind of mentioned already that you need to work on your discipline some more. But as it stands right now, what are some things that you would say that you're proud of yourself for, that you would consider a strength in your trading? And then, some weaknesses, some things that you need to work on, so discipline. But, what are some things that strengths and weaknesses?
Well, my strength is knowing that I can realize fast enough that I'm making a mistake, not to blow out an account. But my worst problem is I chase trades sometimes, and that's really it's really hurting me. I really need to improve my entry point, and that's pretty much it. I think if I can manage to be more disciplined, I will be a successful trader. Sorry.
No, that's completely fine. And to be honest with you, Danny, I would venture to say most people who get into trading experience this problem. And like I said, I'm completely there with you. I used to see, wow, this thing's really roaring. And then unfortunately you buy the top. Like you said, as time goes on, the more and more you practice, the more your brain will start to recognize that, oof, this is not a good time to be buying. Like, I already missed this boat, move on to the next trade or look for a trade in the opposite direction. That just kind of takes some time. And, you're going to put that time in with paper trading and you will figure that out. That's something you can definitely overcome. But it's been
on this point, because absolutely right. And the thing is, I'm just thinking back to yesterday. So at the time of this recording, yesterday, IDXG was absolutely roaring. And I remember looking at it saying, I should buy right now. And I wanted to chase the thing. So to offer Danny, you some encouragement, and I guess I'm kind of talking to myself just to, beat the dead horse in my own mind. And then to all you as listeners, the urge to want to chase is probably never going to go away. That's just human emotions. Us as humans, we like excitement. We like things that are, whoa, oh, I want to be a part of that. Yeah. But that feeling will never go away. The thing that we need to work on, though, is identifying that we're having that feeling and that feeling is not a good feeling and that we should not act on that feeling. So feelings as traders, not a bad thing, because we're just human beings. That's just how emotions, that's how feelings work. But we have to strive, and you got to get to the point where you can recognize and be like, you little tricky voice. I know what you're trying to do to me right now. Good try, but see you later. The voices are never going to go away. You just got to learn how to deal with the voices. The chasing thing, we all have that. It's just a matter, Danny. And like you said, you're learning through your paper trading. So to echo Chez's point, that's the beautiful thing about paper trading is he's learning about this stuff, but it's not costing him any money because he's paper trading. And, you just got to fight through it. So I had to harp on that because that's a great point and, something that we all have to remind of. Just because you hear voices doesn't make you a bad trader. If you start to act on the voices, that's where you become a bad trader. So, Chez, you're back up.
All right. Well, Danny, it's been an absolute pleasure talking with you. Thank you for taking some time out of your day to do this podcast with us. But I know the main reason you kind of came on here, and I'll have to see how I'm going to get this through customs, but I do have a time machine, and if I'm able to kind of ship it to you, and you could go back in time to when, you can actually pick the time when you first started trading or more recently, what is one piece of advice you would give yourself?
Start sooner. Just do this whole process, but sooner. Like when you start working at bank, you should have started right away to be interested into the market and paper trade. That's the two things that I will have told my 7-year younger self.
I like that because you from a get-go understood the importance of investing in education, which is what a lot of people's answer is. So for you didn't have that, but if you are always on board for investing in education, which you always were, then I think that is a logical spot to want to start is, I should have just started sooner. But hey, you know what? Starting when you did is better than never, right? Can we agree with that?
Yeah.
Good. I mean, because you could still be thumbing sitting in your office saying, oh, I should, but you already have. So fun question time. This is, I've never asked these questions to a French Canadian before, so I'm very, very maybe easily entertained, but I don't know. What is your favorite movie?
Well, pretty much every Quentin Tarantino movie. I'm just a great fan of Quentin.
And I mean, he doesn't even have to nail it down to one movie. It's just a director in general. And yeah, he's got a ton of great movies, and I'm also a fan as well. Now, what would you say is your favorite kind of meal and dessert?
Meal, I think I will go for a classic rib steak. I really love steak. And dessert, I'm not a dessert type guy. I'm more like, for me, a good dessert is a good cheese.
Okay. So you're just saying, give me some more. You're saying, give me more steak and a little bit of cheese is what your dessert would probably be.
Yeah.
More steak and cheese. What hobbies? What do you like to do up there in Quebec?
Well, I'm a huge Magic the Gathering fan. The card game I've played since I was 8 years old, and the stock market. I have a pretty simple life.
Wait, the Magic card game, that thing's still around?
Oh yeah, it is, and it's bigger than ever.
Yeah, I was gonna say
so
that'll
totally
be around for a long time. Yeah,
I mean, I remember that from way back when. I guess I'm just not in the loop on that. I thought that had kind of gone away, but I stand corrected.
Yeah, my brother-in-law is still into that. But yeah, that's pretty cool, because a lot of people, with technology and stuff, and there's actually versions of that on the computer now too. So I guess
those
that makes
cards
sense.
worth money though too? Can you trade them like baseball cards and stuff too, or no?
Yeah, that's a part of how I paid for some course for the trading.
Okay, so you were already involved in trading, just trading of cards instead of actual stocks. So
yeah,
interesting.
Supply and demand. But so Danny, what would you say are 3 words you believe should be associated with successful trading?
Take your time.
Take your time. I like that. Clever. Take your time. I had to count that out on my fingers, but that is indeed 3 words. Short, simple, but so important. Ches and I were always telling people, hey, the markets are not going anywhere, so take your time. Don't rush.
Now I'm 30. If I can manage to be a good trader in 3 years from now, and I do it for the rest of my life, I can have a decent amount of money when I retire. It just, you have the time in your favor when you're young, so just use it.
That's absolutely. You're never too young to start. But I mean, you're 30, man. You got plenty of time left. I mean, the way I wish I would have started sooner. You're acting like you're 75 years old or something. You're good to go, man. You got plenty of time. Well, Danny, to echo Ches, thank you very much for spending some time with us today and taking time out of your day.
Thank you. It's been a pleasure.
And we will definitely see you around, I know. And I'm curious to see, and I'm anxious to see how all this Forex trading goes for you. But you summed it up perfectly. You're just going to paper trade until the paper trading says it's time to go to real money. And there's definitely no shame in that, because you got to take your time. So for you listeners out there, final few things before we go. First, if you're listening on YouTube, definitely click the like button. That helps us out. But explore the rest of the channel too. A lot of other videos, quick tip videos, live trading videos, lots of good stuff there. So hopefully you ultimately decide to subscribe. If you're listening on the website itself, claytrader.com, click that share button, leave us a comment down below. And we will reply. We will interact with you for sure. And then finally, for those of you listening on iTunes or any of the other podcast players, please subscribe. And especially on iTunes, if you could leave us a rating, preferably a good one, that really does help us out. And it's one of those things where even if you never spend a single penny on the site, that's totally cool. But just spending a couple moments to leave us a rating on iTunes truly does go a long way. And it helps Ches and I out quite a bit. So thank you again to Danny, to Ches, and to all you of his listeners. We will see you back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.